and welcome to FountainFX. I just want to share with you a trade that I took yesterday, and the main reason I want to share this with you is because basically I messed it up, and various reasons why I messed it up. The main reason was that I was on a time clock. Basically, I had to run out the door before 6 o'clock yesterday evening. I had to go and do something. And at 5:30 I was looking at this area here, and I put in a short position at 137.68. If we look here, we can see that price came up to this area, fell away, came up to the area again, and fell away further. So it was showing some weakness from this area just above the 137.70. It was showing it around about the 137.72. If you draw a line along these candlestick bodies, you can actually see that it's like an arc, and you can see that momentum upwards is turning. You can see that clearly. Also, we've got dojis, spinning tops, dojis, etc. We've got very long wick here showing buying pressure, and we've got it again here. Anyway, what I did very stupidly is I placed a sell order. That wasn't the stupid thing. I placed a sell order based on price action. Sell order, got a stop above this area here, so I sold at 137.68 with a stop at around about 137.74. so that's only 6 points of risk, very, very small risk. I was expecting it to then move, only because I was impatient I went from the 5-minute down to the 1-minute, and I saw where this long wick is, this was price coming back up, and I just went, well, it's not going. I was expecting this candlestick, but a candlestick earlier. So because of my impatience, I took my trade off, and then promptly ran off, did various things, and came back and saw exactly what it had done. I plotted this trend line afterwards just to show how, by managing from the highs to the highs, you could stay in the trade. And it's also showing the importance of the 5-minute chart. If you get used to looking at price and you want to look at price action, I recommend looking at the 5-minute chart, but I wouldn't go down to a 1-minute, not yet anyway, but just look at certain things, look at candlestick formations, look at how it shows strength and weakness, and use that. Anyway, so it then fell, and if you look, it was a movement of 137.70 all the way down to 137.30. I entered at 137.68. Had I waited for this trend line to be broken, I'd have got out at 137.37. So what's that? It's around about a 30-point move of profit I would have made, and that would have been a very nice trade for the day. However, I didn't do it because of other things. So the one thing to be in check with is when you're trading, when you look at the market, make sure you're focused, make sure you're not distracted with anything else, and therefore you'll be able to focus on what you're doing in terms of your trading, and not have the telephone going off or people knocking on the door saying, "Oh, hey, can you come and do this?" or "Can you come and do that?" etc. You'll be focused on your trading. As it is, there's a lot of noise out there in terms of news feeds and people's opinions and all sorts going on. One thing I want to share about that in terms of opinions, just quickly before we finish, is if we actually look here, when I was first taught, some of the people that taught me about trading, they would challenge my ego as a man. As men, we want to win everything. Okay, we've always got to be right, and we've got to win everything. So with this kind of a trade, I would be told, even though, let's say, I'd have taken it 138.68 and got out 138.37, made 30 points on a 40-point move, someone somewhere would have turned around and said, "Oh, well, I made all 40 points." Yeah, and it was about this challenging of our greed emotion, which is we have to get everything. There's a trader called trading educator called Alexander Elder. He trades futures and stocks, and one of his statements is that good traders or average traders make 10% of the move. So if you think about that, 40 points in that move, an average trader would have made 4 points profit on that. Okay. He then also says good traders make 20% of the move. So if you think about that, they'd have made 8 points out of that move. And he says, and the best traders, the most awesome traders, make 30% of the move. So that would have been 12 points. So in other words, as soon as I heard that, I thought, I don't have to take everything. I don't have to be absolutely perfect all the time. I don't have to be correct. What I have to do is I have to give myself enough space in order to let my trade work out, and also to be able to manage it based on my level of risk, okay, and my level of reward. So to have had a risk here based on my stop of 6 points and made 30 points from that, I've basically made 5 times, 5 to 1 risk reward on that trade, and that's phenomenal, and that's on a 5 minute. I haven't had to go to an hourly chart or a daily chart to be able to find that level of risk reward. And that's really what I'm trying to teach you guys. I'm trying to keep it simple and point out that you can see certain market moves at 5 minutes. The market is always changing. This is the other thing. I was taught on a 1 minute chart and it blew my mind, okay? I could never see areas of support or resistance or anything. I had to take a step back and look at the daily charts and the 4-hour charts and the weekly charts and that kind of thing to really start to see how price moved. And then once I got comfortable with that, then I could bring it down to a smaller time frame. And that's really how I would recommend it for yourself if you're struggling with seeing what I'm sharing. So that's it from FountainFX. Happy trading. Have a great weekend, Laka Naviak, and we will catch you next week.